Crude oil for the day traded with a slight bearish price. It has started to retrace, but most importantly, it has failed to break below $80 levels, the crucial support levels. Likewise, net gas has been trading bullish after getting the support at 1.82. It is now again trading above the key levels at 1.85, and it is staying within the resistance zone at 1.8586. So now what to expect today from oil and gas, how we can profit, we will see with the help of charts and indicators. If you're new to the channel, subscribe and press the bell icon to get the notifications. Do like, share and comments. It's a great motivation. And do join the free Telegram channel for live market updates. And do join the channel memberships here on YouTube and support the effort. Let's start first to look into oil followed with gas. Watch till the end. If you look at the hourly charts, we can see oil has seen a good rise here. Then it has started to retrace, consolidated. And I have mentioned one thing that see when it starts on bearish, consolidates here, then generally the second breakout takes the same trend and it is precisely traded with slight drop, but it is yet to break below the support zone here at 79.8, 80.2. Now these levels are definitely going to play a major role in deciding, because below 79.8, $80 levels, the next support is going to be 79.4, 79.5. Right now it is shying away to break below the support levels at 80.2, and thus we need to be watchful of this. The stochastic is rising here. After forming the double bottom, it is looking upwards. MACD is trading with divergence and bearishness. It is looking downwards, and it appears that it is going beyond the wave here. RSI has dropped as well. Coming to 2-hour chart. Now on the 2-hour charts as well, you can see why these levels are not only important with respect to the candles and the resistances 80.2 and 79.2, if 79.8, if you recall, yesterday also we were looking at these levels, and now again it has come to test the same levels. The 20 period moving average and the median of the Bollinger Bands are also situated at the same level. So this makes this zone as a very stronger support. Now if you look into perspective, rise, flag formation and a breakout here on the upside, any point of time while staying above 81 is certainly a sign that it is going to stay. As long as it respects 81, it does not breaks beyond 81, we should not be treating this as bullish. That is very clear. On the downside here, 80.2 and 79.8 zone is where we should be cautious of. Now see on the 2-hour charts, the bearishness getting diminished, and this could be a reversal sign as well. Let's see what next candle brings. If you look at the stochastic, this is running flat, while MACD, look at MACD, it has crossed over here, trading with divergence 3 candles away. It suggests that it can continue to deliver a bearish candle. Why? You can see this, a stronger rise is seen and now looking downward, so possibly it can continue to retrace with modest bearishness. Though there is scope for it to rise more, RSI has dropped, it has come out of the overbought zone. Coming to 3 hour. On the 3-hour charts, yes, it is coming out of this bullish channel. It is trying to give a breakout, and see, this is what I had mentioned, and whenever it breaks, it is, see, it has given a bigger bearish candle. Second thing is, now where you can consider that it is reversed, it has to break beyond at least this zone, that is 80.6, 80.8. If at any point of time oil breaks beyond 80.8, you can initiate a buying entry here and expect it to move towards 81.2. Beyond 81.2, 81.4 zone, oil is not going to come back. It is going to move towards 82 and 82.5 levels. So yes, if any point of time today oil stays above 81.2, 81.4 zone, just stay bullish. Right now it is not showing any such sign, though it is forming a nice flag pattern here. It has to give a breakout yet. If you look at a stochastic, this has dropped. MACD is trying to converge. It has not yet crossed over. It is trying to converge here. RSI has come out of the overbought zone. Coming to 4. On the 4-hour charts, what oil has done is it has tried to give a breakout. Right now you can see this could be a reversal as well. If oil stays above 80.6 and 80.8, you can initiate a buying entry. You can consider this as a reversal, though the prices are trading with divergence from the 20 period moving average here, but it does not mean that it is mandatory for it to come back. But if it is bullish, it can continue to rise from the current levels, and thus beyond 80.6 possibly we may see more rise here. The stochastic has dropped here. MACD is trying to converge. It is not yet crossed over. And yes, it is just trying to converge. It has still room for it to rise. RSI, again, it is just coming out of the overbought zone. Coming to daily. Now look at daily charts. And before we look into daily charts, if you want to learn this art of trading, you can be part of my 30th mentorship batch starting first week of April. Equip yourself with the tools, concepts and strategies which can help you identify profitable trades with ease, and With the help of the key trade setups, you can trade profitably. Thus, join this mentorship batch and definitely you'll cherish the learnings for life. Do reach out to me for details related to the services. You can also be part of my signals channel on Telegram where trading as per the signals you can benefit. So write an email or ping me on Telegram for details related to the service. And many of you have asked me to recommend a broker which is safe, trustworthy, secure. Transactions are easier, available across the globe. It is regulated, and yes, which offers a swap-free account with the lowest spreads. You can find the link in the channel and video description. Lowest spreads are offered if you join through the link. So do join the broker and enjoy. Now look at the daily charts here. See what you can see here after retracing here. Earlier we have seen it giving a breakout, and I have shared in my previous update as well. And in my every daily update, I have mentioned oil is staying in this bullish channel, hitting back towards 2050 period moving average. It always tries to take a flight. And today again, see, only concern today is it has to stay outside. If it is bullish in the coming week, it has to expand the Bollinger Bands. It has to put pressure on the Bollinger Bands. Yesterday was one when it is closed outside Bollinger Bands. Now today is what we will decide that whether it is going to stay bullish in the near future or not. Thus, it is very, very important for us to watch out for oil at how it behaves. Yes, we can initiate a buying entry at 80.6, but with the caution note that 80.8 and 81.2 and 81.4, three key resistances. Any move above 81.4, we can expect a stronger rally in crude oil, which can take it till towards 82 and 82.5, which are my near-term targets, as we have seen in last few trading sessions, in last few weeks in 76, 77 levels. I have been mentioning that oil is a buy, and I will be remaining it on buys in the coming month as well. That is what I see. We have recommended a target of 90 plus dollar levels in next few weeks. So let's see if it continues to move on the upside today. At the same time, on the down, a selling entry I will recommend is right now at 80.2. You can sell, but with extreme caution. 80 and 79.8, very very good support. 79.5 the next support. And if you see oil is staying below 79.5, you can say now it is trying to retrace, and we can look forward to $79 levels, chances for which appears to be less. Take your positions accordingly. Let's have a look at natural gas. Today you can see how beautifully it is stayed within the zone. One important thing is it is delivered higher lows. Second is it is delivered higher highs. Staying in a box, you can see it is a beautiful box which is created. I have discussed earlier in the day why it is important for net gas to break beyond 1.86, 1.88, and then 1.9 levels. These are the three key levels I had mentioned. It is just on the verge of the first key resistances. Then I will look forward to 1.8 and 1.9. If gas breaks beyond 1.9, you can see this as a breakout, and then stronger bullish momentum can be seen. If it closes bullish today, the opening coming week is going to be a gap up opening. Yes. And if you look at after consolidation, it is trying to break out. This is the first candle. Possibly the second and third bullish candle may also follow, which will take it till towards 1.9. Moving averages are trading with divergence and staying bullish. If you look at stochastic is rising, MACD is almost flat, RSI is rising as well. Coming to 2 hour chart, likewise on the 2 hour charts, consolidation breakout, let it stay above 1.86. You can wait for 1.88 and 1.92 levels here, beyond which we can see a stronger rise. As you can also note that it is coming out of this bearish zone. Yesterday you have seen it coming out of this zone, and now it is at least looking forward to this zone here. Possibly, if not today, next week you can see it, and any move beyond 2 is a considerable uh, breakout, where the targets in the coming week are going to be towards 2.2 levels. Stochastic has dropped, MACD is divergent and bullish, RSI is rising. Coming to 3. Likewise on the 3 hour chart, similar observation after consolidation, first breakout candle. I'll wait for the next follow-up candles which can take it further up. If you look at the stochastic, this is overbought, MACD is divergent and bullish, RSI is rising. Coming to 4 hour, similar observation, moving averages have started to converge here. Good signs for the bulls. Also, one must notice it is coming out of this bearish channel. That is also good sign for the bulls. And it appears it is heading towards the highs of this channel, where we can look forward to 1.8688 as the next. Any breakout beyond 1.9 is a strong indication that net gas is going to give a very strong bullish move sooner. Stochastic overbought, MACD is divergent and bullish, RSI is rising. Coming to daily, Now look at daily charts. See double bottom, first bullish candle, and this candle has started to take a shape. Thus, it appears that this can be a further bullish candle, which can in fact take it above 1.9 and can move towards 1.9 to 1.95. Possibility is there, but right now it is getting very stronger resistance on the upside. So, looking at this, I will recommend you to buy net gas today. If you see it is staying above 1.86 levels, when you see the lower prices above 1.86, you can buy. Just keep trailing with the 20 points as long as 1.9, 1.92 are not, because there are greater supports at 1.8, 1.88, 1.9 and 1.92. So these three levels it needs to break in order to stay bullish towards 1.95 and $2 levels. If not today, some point of time soon. But yes, right now it is staying bullish. That is what we can look into. We can see here. On the downside, a selling entry I will recommend now is only below 1.83. When you see the higher prices below 1.83, you can take a sell entry, but see 1.83, 1.82, this zone you should mark out. As long as natural gas stays above 1.8382, you should not treat this as bearish. Below this, you can expect it to move towards 1.8. And if it breaks 1.8, you can say it is reversing, and and a sharper drop towards 1.76 levels can be seen, chances for which appears to be less. So take your positions accordingly, like, share, subscribe, and comment. Join my mentorship by Chain Signals channel. Reach out to me for your queries related to the services. Do watch the weekly review that is going to set the direction for the coming week. Do not miss that. Do watch it tomorrow. Just subscribe the channel and press the bell icon. Thank you. Have a great profitable trading day ahead and a happy week.